the bullion banks over there, trapped by their own over-leveraged promissory notes, are unable to deliver on physical contracts. It would unleash not only true price discovery and maybe the real revaluation of real assets, but these banks don't just trade in gold and silver. These are like the Goldman Sachs's of Europe. These are banks that trade in everything. It would set off a systemic chain reaction, and it could push prices of gold and silver parabolic. Because the truth of the matter is that real price discovery hasn't been allowed to take place in gold and silver really maybe ever. It's beginning to, because the only way that you can beat these players who have unlimited funds is to stand for delivery by players that have unlimited funds, and that is what is happening. The institutions across the globe, like all of the central banks, are quietly and slowly standing for delivery.
The silver market is under attack, and Andy Schectman says the next few days could be a turning point for the entire global financial system. Bullion banks are cornered, lease rates are exploding, and physical silver is vanishing from vaults faster than anyone expected. Andy's direct warning? This is it. The first real systemic short squeeze in modern history could already be underway. If it breaks, silver could go parabolic, gold could follow, and some of the biggest banks in the world could be exposed overnight.
It would set off a chain reaction that would be spectacular to watch. Not only could it bring down some of the biggest banks in the world, it would push prices to levels that people can't imagine. And for people, if one of these banks freaks out and says, this is just killing us, we are getting destroyed by the price continuing to move higher, and they break ranks and cover, just like that, boom, the whole thing falls apart. Kind of like the London gold pool fell apart. So I don't know. I think that for the first time in my career, all of the rhetoric talking about that, it seems as though not only does this administration understand it, they're taking steps to protect the COMEX by stuffing the vaults. And I do believe that there will be some sort of controls. At the same time, the target seems square on the Bank of England and the LBMA. So I think it would be something to certainly behold, not just in the gold market, but the reverberations through much of the financial ecosystem in the West, I think, would feel the fallout from that. Right now, as an example, in London, there is between a 5 and a 6.5% lease rate on borrowing silver. And this just came out of Bloomberg. Bloomberg confirms the London one-year implied silver lease rate has blasted above 5%, while on September 4th, the JBMA, that's the Japanese Bullion Market Association, Bruce Ikemizu, reported a London one-month lease rate rocketing to an extraordinary 6.4%. Over the past 2 decades, silver lease rates have usually hovered well under 1%. Even in a tight physical market, they often spike into the 1 to 3% range briefly. This signals a fatal shortfall in deliverable physical silver. Here's the interesting part. Bullion banks trapped by their own over-leveraged promissory notes are unable to deliver on physical contracts, may unleash true price discovery and the revaluation of real assets. That's coming out of Bloomberg. What I'm basically saying to you is that there is a race right now going on for physical metal that has never, ever happened. These contracts were always ways for countries to offset risk, to hedge, for miners to offset risk, to hedge, for companies like mine to offset risk and hedge. No one ever stood for delivery. And now all of a sudden, everyone, including central banks, are standing for delivery. It was always the East. Now it's happening here too. And there's a race. And the fact that it's all coming in here should tell everyone that this is far bigger than we are being led to believe. And it will be a battle. I really do think someone got into Trump's ear and said, we need to do this, we need to do it now. And you can see it by the amount coming in. One other point, Vince Lancy, one of the smartest guys in this industry, says 85% or more of the metal that is glowing around the globe is not being reported to the IMF. These countries, including the United States, do not want anyone to know just how much is coming in. And we continue to see countries be caught. Oh, sorry, we didn't report it, but the import-export numbers flag it, whether it be Saudi Arabia or China. Both last year were caught taking large imports in and not declaring it. There is a race going on right now, and London is the epicenter of it. This Bruce Ikemizu guy, the head of the Japanese Bullion Market Association, came out 2 weeks ago and said, by the way, London is trading 3 million ounces per day of deliverable platinum contracts. There's no platinum, he said, in loco Switzerland, means location, Switzerland or London, and yet they're trading 3 million ounces a day. What could possibly go wrong? The price setting that has happened in the West has been outed and will ultimately, I think, be neutered by the massive physical acquisition by not only the rest of the world outside of London, but by the U.S. too. And guys like Tom Luongo say that the target is squarely on the Bank of England and the European banks that have these massive short positions. All of the metal coming back could have very easily covered the short positions by the U.S. banks, who, when they short on COMEX, take a long position in London. They brought all that metal back. And I would simply say fireworks are coming on both sides. And maybe that's why there's such a rush to get all this stuff in and to reclassify silver as a strategic element rather than just an industrial, because we know just how important gold and silver are in the scheme of things moving forward.
Okay.
Speculators, after months of a little bit of liquidation in the gold market where the speculators were taking profits and gold kind of just chopped sideways, they are returning with massive open interest rising again in the futures market. What open interest means is people are coming in to buy more open interest. They're buying more contracts, and prices breaking out again as we see it nearing 27 or 3,700. This is the normal link between purchasing and higher prices, okay? To your point. And you're the first person who I've talked to in a while that's got this.
No.
And that is that the silver rally right now is driven not by speculation, but I would argue this systemic short squeeze, because you have record high lease rates, you have falling open interest, meaning the speculators the hedge funds aren't buying. You have massive delivery demands, 58 million ounces since late August, 10,550 tons year to date. This points to a shrinking physical liquidity and mounting pressure on the market in London. London shows that they're trading 600 million ounces of silver a day, representing between 1 and 2 billion paper ounces, claims 1 and 2 billion, and they have 140 million ounce free float backing that 1 to 2 billion claims and 600 million ounces a day. So it really means that London basically virtually has no free silver to meet rising investor demand or back the billions of ounces in outstanding contracts. And with the lease rates at that level, it's basically the risk of a delivery default in London is rising. And that is the point where I do believe that what you just said is true, that there are traders that smell blood in the water with silver, and it is being pushed up because of the falling open interest, more by short squeezing than by anything else. And silver is something called a Giffen good, or Giffen good means that as prices rise, demand increases. That's kind of abnormal in investing. But it makes shortages even worse, because as the price rises, you'll get the industrials that say, man, we need to just jump on this now, like Tesla, because we need, so much silver and the price keeps going. Let's just jump in.
Right. They got to lock it in as a hedge. Yeah.
Yes. And so, yeah, really, 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 really good question. And I would say gold's open interest is massive. That's the central bank. Silver open interest is falling a little bit, but the price keeps rising. That's a short squeeze.
Andy doesn't mince words. The bullion banks are trapped by their own promissory notes, he warns. For decades, futures contracts were just paper games. But now, everyone, including central banks, are standing for delivery. That means physical silver is being taken out of the system, shrinking available supply and forcing banks to scramble. Bloomberg recently confirmed what Andy has been shouting. London silver lease rates have spiked over 5%, with one-month rates hitting a staggering 6.4%, levels we almost never see. Historically, lease rates stay under 1%, except in the tightest markets. This is a loud warning that there's not enough physical metal to meet obligations. Andy compares this moment to the collapse of the London gold pool in the 1960s. If one big bank panics and covers its shorts, boom, the entire structure falls apart. And with London trading 600 million ounces of silver paper per day but holding only about 140 million ounces of free float physical, The risk of a delivery default is very real. He points out that the U.S. is quietly restocking COMEX vaults and likely preparing to reclassify silver as a strategic material, which would permanently put a floor under its price. Major corporations like Tesla and solar panel manufacturers may soon be forced to stockpile silver to avoid disruptions, pushing demand even higher. Andy's direct message to viewers: this is a global race for physical metal, and the big money is front-running the public. Nations like China and Saudi Arabia are secretly accumulating unreported stockpiles, caught only by trade data after the fact. The biggest money in the world is preparing quietly, little by little, Andy says, and when the public wakes up, it will be all at once, and too late to react.
Well, I mean, I think it means that big buyers are entering the market, including the U.S. government. And again, companies like Tesla, they're going to be forced to soon stockpile it too, because it is a strategic. Now, it's just something that I think the government acknowledges that we need for national security, whether it be for its military components, whether it be for its industrial applications in electronics and electrical. It's an asset that is depleting in nature. It is falling from what for 5,000 years was 16-1, and it is now 7-1. It's falling, but it is indispensable. It is needed in so many things that there really is no substitute for it. This is it's called inelastic, meaning that the price, the component of it is integral, but the price isn't as important. If you need a fifth of an ounce for a phone, it doesn't matter if the price goes to $300 an ounce. The phone will just cost a little bit more, but you need it. You compare it to what like a very elastic commodity would be. Think of like corn. Corn is very elastic because you can just plant more fields of it, right? Silver isn't, because it's depleting in nature. And I think that's really the understanding here, is that the government says, hey, in fact, the U.S. government, they have a branch of the government called the U.S. Geological Survey Department. Yeah. They came out a year or so ago and said that they believe that silver could be actually one of the first elements struck from the periodic table of elements as it's disappearing in nature. So I think that's what it means. It's critical to the safety and security, the future safety and security of the United States government. But countries like India and China have realized that a long time ago. This is why China, the second largest producer in the world, as I've been reporting for the last year, is flying all around Central America and all the way up to Mexico and buying doré and concentrate being a byproduct of the mining process, doré, a crudely refined bar before it's sent for full purification, buying it and sending it back, paying double what the West will, sending it back to China for refining. If they're the number 2 producer in the world, what the hell are they doing going out of their way to Central and South America to buy stuff that is not refined, pay double what the West will, pay to ship it back and then refine it? Because they understand it's strategic, it is critical. And in fact, this was something that the folks in Canada noticed last year. They petitioned the government to call silver a strategic critical mineral, not an industrial metal. And I don't know how that played out, but I know they were talking about it a year ago. The U.S. was just late to catch on. It is this administration who understands the significance of these precious metals, not just for wealth, but for the greater picture in terms of not only monetary reasoning, but also like silver, which is one of the unique things about it. It's plurality in uses: monetary, industrial, strategic, military, etc. Critical. And what it really means, is my opinion, is that the floor has been put under the price of silver and gold by the U.S. government. I really do believe that. Yeah. I do agree with that. I mean, the big money, Adam, always positions itself ahead of the crowd. And you can see the big money is doing exactly that. And I think that the fact that it continues to march higher is very telling without the public understanding. I want to read something to you that I think may help explain that moment, right? And it comes from all people, a central banker. And in 2023, I made a huge deal about this central banker and what he said. I'm going to read you what he said after I read you what was just quoted in investing.com about the Polish central bank and Adam Glipinski, the head of it. You think about a moment that could happen. Investing.com, Poland's central bank announced plans on Wednesday to increase its gold holdings to 30% of its reserve assets, aiming to strengthen the country's financial security. In these difficult times of global turmoil and the search for a new financial order, gold is the only safe investment for state reserves. National Bank of Poland Governor Adam Glipinski said in an emailed statement. He is proposing a motion to the bank's management board about raising the reserve target for gold to 30% from 22%. Here's what he said in 2023. Coming from a central banker, this caught my attention in a big, big way. And he said, why does the central bank hold gold? Because it retains its value even if someone cuts off the power to the global financial system that is largely based on electronic accounting records. Of course, we do not assume that this will happen, but as the saying goes, fortune favors the prepared, and a central bank must be prepared for the most adverse circumstances. This is why gold has a special place in our currency management process. You know, he's basically saying, so something happens that blows up the total financial system, whether it be some sort of an outage with the grid or some sort of an EMP. I don't know what the hell he's getting at, but to hear a central banker say, yeah, a cyber attack, we do, because it's all based on electronic accounting records. I mean, come on. And that is true. Everyone's money is in the cloud, right? So that's why they own gold. So yeah, I think there could come that time where something happens like that. And, you know, the name of my podcast is Little by Little. It speaks to logarithmic decay. Little by little by little by little, and bang, all at once. Where is that all at once moment? Is there an all at once moment? Sure could be. The biggest money in the world seems to be preparing for it, slowly accumulating it without anyone noticing. Well, they would do that before the all at once moment. You can see the little by little if you're opening your eyes to it. And when that all at once moment happens, yes, the market will be, and I've always said something similar to what Mike said, and I'm a fan of Mike, he's a smart dude, and that is that for people like the outsiders, people not listening to this show, the market will be defined by the price being too high, kind of the way that the public looks maybe at Bitcoin right now. For people watching this show, it will be defined by the inability to readily source product, because there are two major mints in North America, US and Canada. The US has been nothing but the model of inefficiency for the last, I don't know, since 2008, continually not meeting demand in a period of time where less than 0.5% of the public owns any. The Royal Canadian Mint, fine, a little bit better, but that's it. You have some refineries across North America. The majority of all the other gold is across the Atlantic. And once something wakes up the collective wisdom of the public, or the collective consciousness of the public, to precious metals, just like that, the product disappears. We've seen it so many times, like during the pandemic, and premiums go parabolic.
Andy ends with a chilling reminder. When this breaks, you won't have time to react. The price will be too high, or the product will be gone. That's how these moments always unfold. Slowly at first, then all at once. And now it's your turn. Do you think this is the moment silver finally escapes paper price suppression? Could we see $30, $50, even triple-digit silver if the bullion banks lose control? And what happens to gold if this short squeeze goes global? Let me know what you think in the comments. I want to hear from you. And if you want to stay ahead of these historic moves in real time, make sure you subscribe to the channel right now and turn on the bell so you never miss an update. Big money is already preparing. The question is, are you?